Intraday reversal to start the month with the Nasdaq now on pace for its longest weekly win streak since January of 2020. Our next guest believes, though, the market remains vulnerable heading into the summer. Joining us now, BTIG's Jonathan Krinsky. It's good to see you. How vulnerable do you think we are? Because, you know, technically speaking, we may close above 4,200 for the third time in 4 days, whereas you could easily make the argument that that's a bullish sign, not that we're about to have some big reversal.
Yeah, you know, we've continually said, Scott, good to see you, that, you know, breakouts in this market are susceptible to vulnerability because that underlying breadth isn't there. And, you know, we saw that back in August. You actually got up to 4,300 last August, and then we had the big sell-off into the fall. But I think, you know, the distinction to make here, the issue isn't that a handful of large stocks are outperforming a rising market. It's that they're going up while the broad majority of stocks are actually falling. And if you look, you know, at the median stock since early February, it's down about 10%. Small caps down about 12%, micro caps down 15%. So, you know, even though, you know, everyone's widely aware of this breadth divergence, and, you know, everyone really wants the same thing, right? Bulls want breadth to expand on the upside. Bears want the mega cap techs to move to the downside. And we just keep getting the opposite, where this bifurcation keeps getting wider. So, you know, ultimately that's got to come to a resolution. We still think it's, you know, with tech to the downside, and we think the action last Friday was a bit of that kind of blow-off type of action. If you look at the, you know, the volatility and the volume in a lot of the tech stocks, it's kind of emblematic of that sort of blow-off type of move.
It doesn't have to resolve itself necessarily in the very near future, though. I mean, at what point do you look at and you say, okay, it's taken us a while to get over the 4,200 hurdle, and if we can maintain above that for a period of time, at what point do you suggest that that is, in fact, a bullish move for the market? No matter how we got there. No matter how we got there.
No, that's a good point. I mean, time is as important as price, and, you know, spending you know, a week or two above 4,200 would be convincing. You know, the other thing to think about, you know, we're now over 150 days removed from the October bottom, right? The October fall bottom. We looked at all meaningful pullbacks in the market since over the last 30 years. And at that 150-day mark, the average percentage of stocks above the 200-day moving average was about 70%. The minimum we've ever seen at the 150-day mark is 56%, and this time around we're at 36%. So, you know, it just shows you this. If this is a new bull market, it would be unprecedented as far as, you know, the lack of breadth this far into the new bull market. So, you know, I think people are harking on it for good reason. It's certainly something that either is going to be a new bull market that we've never seen before, or, you know, as we think the big caps are at the later innings of the rally, and we're ultimately going to move back to the downside here.
I mean, it's already been somewhat of an unprecedented bear market in many respects, hasn't it? And the fact that, you know, we never got that real, true capitulation moment that some, including yourself, were looking and calling for, and now we've moved away from that, and we're looking for other signals.
Yeah, I mean, look, you know, you look through the charts over the last couple weeks. I don't know that I'd call it capitulation, but there's some pretty ugly breakdowns in consumer names, retail, industrials, financials. Obviously, we had the mid-banking crisis. So, you know, so far it's just been this rolling bear market. You could argue maybe there's some capitulation in tech last year. So it's just been this rolling bear market. And the reason you haven't had, you know, the VIX spike like many thought it would, and VIX curve inversion, et cetera, is because you just haven't had that correlation one selling. I think the setup into June, which, by the way, over the last 20 years, June's the second worst performing month. So, you know, we've had some volatility in June. I think the setup is there. Again, if this blow-off type move in the Nasdaq names resolves itself to the downside, again, we have to see it. We haven't seen the downside of that, but I think the volatility and volume on the upside is kind of speaks to us late stages here.
Okay, Jonathan, thank you. We'll talk to you soon. BTIG's Jonathan Krinsky joining us here on Closing Bell.